Hi, folks. Welcome to Money and Politics. It is November, and I hope everyone understands that. By the way, this coming weekend, we're going to have the clock set back. So there's a heads up on that. Hope you had a good Halloween. And tonight, maybe a little late, I might give you some news that might scare you. I don't mean to scare you. I do mean to report the news. So I'm going to do something a little different, but it's going to be based on news that came out today. First, let me just run through some of the items that price-wise I want to cover because there are some interesting things happening. First of all, INND. Now this is N as in Nancy, N as in Nancy, D as in David, okay? Which is the hearing aid company that just made an acquisition recently. This is a penny stock, went up 36.4% today, and closed at a penny 0.9. Okay, so it's 0.019. And so that's one thing I wanted to bring to you. We had a couple of our smaller stocks making some movements. Here, one we talked about in the past, but not too much. KOPN, King, Oscar, Paul, Nancy. KOPN closed at $5.76, up almost 10%. And that is, they've gotten recently a couple of contracts. They sell lenses. It's almost kind of a play where you would wear glasses where you can get information, kind of as our jet pilots do. And they go around and they can have items superimposed on their field of vision on their eyes. That's kind of what this is as well. So you could almost have a computer screen hanging down in front of you. As one example, as you're walking down the street, and it might be telling you that, oh, that building off to the side is historical, and if you want to know, you could bring up information. It's good for law enforcement. It's good for a whole variety of applications, medical. So they went up almost 10% today. I am not pounding the table to buy either of those, but I am, because we've talked about them, I wanted to make you aware. Forwardly, which we haven't talked about too much of late, closed at 8 cents, up 3.85 cents. And then in mode, which we have talked about of late, and that hit an all-time high at $97.85. And I will remind you that did a 2-for-1 split. I believe it was in about a month ago or so. I think it was in late September. I'd have to go back and check, but that. And then Tom David, Trade Desk, TTD. So Tom David, $76.49, and that went up 2 cents. Now, let's go to something that came out today from the government. And this has to do with, we live in the world, of course, of Bitcoin and Ethernet. And now we have Brian Foote, the CEO of Humble, also involved in a company out in Wyoming and looking at stablecoins. And I wanted to bring this to your attention that the government came out today with a report, and the headline is that stablecoin risk spurs U.S. agencies. Stablecoin risk spurs U.S. agencies to seek power to crack down, and so that's something that you need to be made aware of. And so, as it says down here, excuse me. In a highly anticipated report, the Treasury Department, Federal Reserve, and other regulators urged lawmakers to let them police stablecoin issuers like robust capital markets and constant supervision, like banks. But as a plan B, the watchdogs made clear they would activate a rarely used power to examine whether the coins pose a systemic risk to financial stability, a review that could trigger a raft of new rules. The 26-page report released Monday by the President's Working Group on Financial Markets represents a watershed moment for the $130 billion stablecoin market and cryptocurrencies worth trillions of dollars that it underpins. The industry so far has operated with little government oversight, and the President's Working Group is sending a clear message that that era is coming to an end. Quote, the rapid growth of stablecoin increases the urgency of this work, the regulators said. Failure to act risks growth of payment stablecoins without adequate protection for users, the financial system, and the broader economy. The coins are called stable because they have a value tied to that of another asset, such as the U.S. dollar. Stablecoin issuers say that they achieved that peg by keeping an amount in reserve that's equivalent to their tokens in circulation, and they typically guarantee that investors can exchange their tokens for actual currency at any time. But regulators have long been concerned that the pledge could ring hollow, especially during a crisis. I won't read quite all of this, but let's just bear with me for a little longer here. And let me move this down. Though some stablecoin issuers predict they will be widely used for payments and remittances, most investors, for now, rely on the coins as a parking space for money they want to invest in Bitcoin and other cryptocurrencies, or as a means to easily transfer money across crypto trading venues. Another spam call. The Tether is the biggest stable coin with a value exceeding $70 billion, according to CoinMarketCap. And while recommendations envision stablecoins as a regulated banking product, the report emphasizes the Securities and Exchange Commission, Commodity Futures Trading Commission, and other agencies can police transactions in the meantime that involve trading, lending, and borrowing. So when we are talking, as I really haven't, but is part of the background that's going on here, both with Humble and with other platforms, when we are talking about whether it's Bitcoin or Ethernet, or now the blocks, which is a new coin that Humble is apparently looking to work with, we have to be aware that government regulation in this area can be and will be a factor. And this is why, again, folks, I've been covering politics for 30 years. I bring this to the table, money and politics, because so much of what happens in the marketplace, almost everything, is going to be regulated in one form or another by the government. And when you have this new trend of coins coming out as currency, it'd be interesting to have this conversation with Brian Foote, because he knows more about the whole crypto world than certainly I do. But my read on it is, when you think about it, let me make an analogy that years ago, when the European nations were joining together to have the euro, I thought to myself at the time, that's not going to happen. That's not going to last. Because if you're England, I mean, you could make Germany or France or whatever, but if you're England, let's say, and you can't control the value of your currency, how can you be an independent company or country? Because every country has had its own currency. And the United States, of course, has the dollar. And the Federal Reserve, in many ways, not entirely, but in many ways, regulates the value of the dollar through interest rates and through the availability of dollars in circulation. They have different measurements. M1, the number of dollars in circulation. So when they want interest rates to go higher, when they want to control a runaway economy, kind of as we are in danger of having now by having so much money circulating because of the Fed, what the Fed will do is pull the money in. Literally, the banks send dollars into the Fed, and the Fed burns them, and they cut back on the number of dollars in circulation. So as the dollars in circulation decline, prices go up. The point is the Federal Reserve, here's the big point. The point is the Federal Reserve has control of the value of the dollar, not entirely, but in many ways. And if we all of a sudden have purchases and transactions going in the billions of dollars through Bitcoin and Ethereum or blocks, or Dogecoin, it's little different in my mind of someone, I used to be in the printing business, of someone printing their own dollars and counterfeiting. Because you're introducing a currency that isn't controlled by the bank regulators, by the Federal Reserve. They don't know if someone is introducing all kinds of transactional tools. They don't know then how much money is in circulation. So that's kind of what's behind this. I'm trying to make this as simple as possible. And one of the last comments here, if we can go down to this. On legislative, it says under existing powers, let's say the government is relying heavily on the Securities Exchange Commission and the CFTC to police stablecoins, noting that depending on their structures, tokens might be securities, commodities, or derivatives. If stablecoins are securities, the Securities and Exchange Commission has power over sales and promotion in situations in which the firms are investing in the assets, according to the document. For certain stable coins, the CFTC, that's the new consumer safety, I can't think of the actual acronym name here, consumer protection, could have broad authority to regulate transactions, and it can crack down on manipulation and fraud when tokens are commodities. The President's Working Group also said that the Consumer Financial Protection Bureau, that's what it is, could have a role in regulating consumer payments involving stablecoins. And I think I did bring this up once before, a long time ago, that, anytime you have some new industry come out that is going to be threatening the status quo, and these coins are going to be threatening, in a way, they're going to be threatening banks, they're going to be threatening maybe credit card companies, because you're going to be able to do transactions that are not tied to the credit cards, right? You're going to be able to use these other transactions. Well, the banks and every industry that is going to be challenged by that is going to go to the government and make their case through their lobbyists that this is dangerous. And that's not to say that they're wrong. We have seen in years past, going back to 2004, when the real estate market crashed. And why did it crash? Because the regulators weren't really regulating what was going on with the mortgages and what we call the liar loans. Now, I would make a strong argument that the government itself was behind the collapse of the housing market back in 2008, because they forced banks to lend bank loans out to people who really should not have been getting the loans. They didn't qualify. And because they didn't qualify for the banks to meet their obligations that the government imposed on them, we had the invention of liar loans, where the banks were lying about how much money borrowers were making so that they could get the loans passed. Well, that can go on for a while, but then the system collapses, and that's what happened back in the fall of 2008. The movie The Big Crash was about that, although it didn't go into what the government did. It just went into how the lenders were giving out money willy-nilly. And to some extent, what we're in danger of having here is an unregulated currency. If the stable coins, if you have them and you go out, cryptocurrencies, if you go out and can buy things when they've been created by third parties, not the government, then the government, as I said earlier, doesn't have any control over the money supply. And I know a number of you are invested in these things. Now, that's the thing I want you to know. You got to watch that the government, it doesn't mean, what does it mean? Let me wrap this up. It doesn't mean that the government is going to necessarily destroy this game, but it might mean that. It depends what they do in regulations. It would also mean, I would suggest, that it could be that the government comes out with their own cryptocurrency. They might do that. I'm not saying they will, but they certainly could. And there's reason for the government to do that. If we get rid of paper money, and I did talk about this before, but it bears repeating. If we as a society get rid of paper money, you can have paper money and do a drug deal. You can have paper money and make money as a babysitter, or maybe running a daycare where you have the parents paying you in cash and you're not necessarily reporting all that income. And if you're a drug dealer, you're not reporting that income where you're selling whatever drug you're selling and getting paid in cash. The government knows there are billions being, or trillions maybe, being transactional relationships going on in the economy that they never get the tax from, because people don't pay taxes typically on when they have a garage sale, or they go out and babysit, or if they're selling drugs. So when we have a cryptocurrency, if the government had its own cryptocurrency, if the government at least had regulations that allowed access to the blockchain where they could see every transaction that went on, there certainly could be a lot more revenue coming into the government, and that's why the government would want to regulate these cryptocurrencies. So I am giving you a warning. I should have maybe just started with this line. I'm giving you a warning to those of you investing in cryptocurrencies that the government could have the power, if they wanted to end that game like that. They could just outlaw these, or they would do or they could come out with their own dollar and say, the dollar crypto is the only one that matters. So maybe some people want to say I'm wrong on this, but we are seeing, as I read to you today, the report coming to the president from the advisory board, that there are calls for the regulation of these items because the government is not wanting necessarily the competition, and they are afraid that this might represent a systemic risk to the entire financial system, and U.S. agencies seek the power to crack down on those agencies. So that's it, folks. November 1st, 2021. It's a brave new world, but remember, don't think that the government, anytime something like this happens, is going to sit there and do nothing. They will come and have some response. We just don't know what it is yet. What we do know from this article is that they are looking to have a strategy that will impose some regulations. So as you invest right now, certainly take care and you are forewarned. And I wanted to make sure that you all saw that. I did tweet that earlier in the day. If you want to follow me on Twitter, there it is. And again, if you want to send me a private note, you can email me at moneyandpoliticsnow@gmail.com. And of course, I hope also that you would go ahead and subscribe to the channel. and make your comments there as well. I read the comments as best I can. So, folks, that's it for tonight. We'll be covering, there'll be obviously other earnings coming out as we go along. We'll be covering that and other news. Humble today didn't do a whole lot. I think it closed at 64 cents. 64 cents, down 2.74. You know, right now, as I say, we're kind of in a holding period. It's not really critical. I know everyone wants that to go up. We want all the stocks to go up, but we're going to be waiting for those earnings coming in from Humble. In the meantime, I'm going to let you go. Thanks as always for watching. As I say, hope you and your family, your kids, if you have little ones, had a wonderful Halloween. 3 weeks from now, we'll be eating turkey thereabouts. And don't forget, coming up this Sunday, we roll the clocks back an hour. We fall back. Until tomorrow, folks, I'll see you later. Thanks for watching.